So today, the markets had a mini crash. Here it is. Okay? We're going to take the events of today as a little case study in how Havens works and why I made it and what it's for. I don't talk to you guys enough about Havens. I should, right? It's like my long-suffering, lovely wife says, right? I'm like the most disorganized person in the world. So forgive me for that. So let's take today's events as a mini case study in how Havens works. Now, markets had a mini crash today, okay? Dow, NASDAQ, all these things slid, all right? So if you're in the typical portfolio, right, 60-40 portfolio run by your financial advisor, Fidelity, Schwab, JP Morgan, Morgan Stanley, whatever, you got hurt today. You got hit. You bled out today. Your portfolio's down by somewhere between 1% and 2% probably, okay? Now, the interesting thing is that Havens rose today, okay? Havens was up by 0.5% to 2%, depending on which Havens portfolio you're in, and there's 3 of them, okay? So what happened here? Well, the markets got hit by a double dose of terror about that the tariffs are real and that AI is going to just like eviscerate the US economy, okay? Now, Havens rose because the things that I've chosen in Havens for the buckets, and Havens is very simple. There's a small number of buckets and there's a very small number of things in the buckets, okay? And Havens rose because I chose those things very carefully, right? And the way that Havens works, well, I describe it as a mini hedge fund. And before you ask, yes, I've helped design hedge funds. I've been the chief economist for one of the world's largest corporations. I cut my teeth at hedge funds. So I know this world intimately, the world of high finance. All right, now I made this thing for you guys with love and care, I often say, because you guys, my readers, right, my audience wanted it. And I thought to myself, well, I can make this thing very easily. So that's why I sort of made Havens. And I'll talk more about that in the future because it's important, right? I want you to know that Havens is not, right, like a typical financial product. It's not, right? It's coming from the heart. It's coming from a very different place, coming from a relationship between you and me. So what happened today, all right, is that I describe Havens as a mini hedge fund because it hedges against all of these forms of macro risk, right? Tariffs, Trump going insane, trade relationships breaking down, macroeconomic disintegration, America becoming a pariah state, AI ripping the guts out of our economy, and even more than that, right? Climate change, fascism, political fracture, the whole 9 yards, all right? And you can read more about that in the Havens sort of intro stuff. Now, that's what Havens hedges against, okay? Now, hedge means that when risk events happen, okay, then our portfolio, instead of falling, rises, okay? And that's exactly what happened today. This is what's so interesting about it, okay? The market had a mini meltdown, right? It slid, but Havens rose. And that's what I designed it for. That's what a good hedge fund should do. Now, I don't want you to get the wrong idea. Havens isn't a hedge fund in the sense that we're trading 1,000,000 times a day or we're doing anything sketchy or anything esoteric. It's not like that. There's a very small number of things in Havens, okay? And all you have to do is kind of like follow along. And I don't update it that much, right? It's not meant to be updated that much. It's a good portfolio is not updated that much. So that's how Havens is sort of a mini hedge fund. When we have events like today, where the market has a mini meltdown, Havens tends to rise. And it tends to rise over time as risk rises in the world around us. Does that make sense? So the way that I want you guys to think about this, okay, and this is important, is that mini meltdowns cost you a lot of money over time, okay? You might look at today's events and say, well, I only lost 1–2%. What's the big deal? But if you add that up over a year, then you start to bleed out big time. You start to lose serious money, okay? And so this is how real wealth is created or destroyed over the long term by 1,000 cuts or built by 1,000 little steps. So take today's example, right? Average portfolio down 1–2%, magnify that over the course of a year. Okay, I'm not saying it happens every day, but let's say it happens every, I don't know, month even, 2% a month. You're down 20, 24, 25% at the end of a year, right? Meanwhile, Haven's up every time this kind of thing happens. Magnify that over the course of a year too. So that's why Havens did so well last year, right? It was up 30, 40, 50% last year, right? Because of this slow, steady growth. Havens rises every time the market goes haywire, every time risk events kind of wreck our economies and our world, all right? Now, what else is interesting, really interesting to me, right? And none of this is a sales pitch, all right? I don't need to sell. If I wanted to sell Havens, I'd go talk to Goldman Sachs or something, right? I'm not that kind of guy, right? You see the synthesizer, where is it? I can't, right? Over there. I like music, art, fashion, culture, all right? So it's not my jam. Not a finance bro, all right? Havens is really made with love and care. So what's interesting about this is that already for the year, it's only Feb, right? Havens is up, right? 9, 10, 11%, something like that, depending on, right, how you count it, exactly which day you do the counting at. That's more than the average portfolios of all of last year, all right? Now, again, that's not a sales pitch. That's designed to teach you what a good investment strategy based on hedging is, okay? And our investment strategies have to change now in this world. The age of funny money, and I talked about this in the last video a little bit, is coming to an end. And that's this idea that all we do is dump our money in the US stock market and it goes up ad infinitum. It's a magic money machine. Has there ever been a magic money machine in human history? It's like physics, right? Has there ever been a perpetual motion machine? No. But we've taken it for granted, a lot of us. And more to the point, our finance guys have taken it for granted. That's why they keep telling you everything's okay. They're living in a world where they think that the stock market can only ever go up. Forever. It's not the case. It's never been the case, okay? So a good investment strategy in a world like this, where the world is destabilizing, the world is falling apart, America's collapsing before our eyes, macroeconomies are disintegrating, politics are descending into fascism, our economies are unable to invest as much as they should, as much as they need to. People are angry and upset and afraid. The world around us appears to be falling apart. And that's before we even get into the effects of climate change ahead of us and other big shocks coming our way. A good investment strategy for this age is not like yesterday. It's not just dumping your money blindly into the US stock market and thinking the funny money machine is going to go on forever. It's not like that anymore, right? So that's sort of why I designed Havens, to hedge against all these shocks. Now, to me, it's very interesting and it's very cool that Havens doing exactly what it was supposed to do. And it's doing it so well, right? Again, it's not a sales pitch. I say that, kind of like I'm proud of it, right? It's like my little baby. Like I made a mini hedge fund for you guys and it's actually working, right? So what I like about that is not really that it makes money. That's a byproduct. Is that intellectually, theoretically, it works, all right? And what's cool, I think, about that, again, it's not that, right, we're making tons of money or this kind of thing, which we are. That's easy, right? Like I said, I'm not a finance bro. I don't really care about that, okay? What's cool about it is, to me, is that it works and it works so well. And I don't mean that in the sense of making money. I mean it in a very different sense, which is that I often say to people, even I don't mess with Havens too much, right? Like sometimes my friends ask me about it, my personal friends. And they say, well, you must be sitting there all day updating it, messing with it. I'm like, no, I don't touch it. Havens is very powerful, okay? And you can see that, right? That's in the example I gave you just today. Market melts down, Havens rises. Havens is very powerful. Even I don't mess with it very much. And that's the test of a good investment strategy. That's the test of a good anything, really. You don't have to mess with it too much. Car, synthesizer, whatever, right? So that's a little intro to how Havens really works, okay? I hope that was helpful, and let me add, I think that Havens is a new thing, all right? Normally, to buy into hedge funds, you need, right, like $5, $10 million, right? That's the minimum. Havens is a new thing. It's meant to give you that kind of insight and guidance, right? Without that huge buy-in, okay? It's really meant to give you hedge fund level kind of advice and guidance. And it's open for you to use, right? It doesn't cost a fortune. And so in that sense, it's disruptive, I think. It's something really new. Okay, this idea of a mini hedge fund that anybody can subscribe to. This is not just for billionaires and lunatics and sociopaths. And Havens is made with those values, right? That's also why it works so well. But I'll talk more about that in future videos. Anyways, I hope this was helpful. A little bit of an intro, a little bit of a mini case study, all right? I don't want you to think of this as a sales pitch. It's not. I want you to focus on the ideas that I've tried to teach you, right? Hedging, investment strategies, why one strategy works, another one fails, what to look for, okay? These are the real things that will keep you ahead of the curve, all right? I hope that was helpful. Any comments, questions, leave them below. Thank you.